And I want to welcome everybody to our monthly workshop. Again, this is a topic we talk about all the time. Uh, we just call it different things. We give it different titles to attract new people. But the truth is, and Steve, you should know this, we've been talking about this for years now. We call this one do your taxes, like how to do your taxes like a boss. Okay. And the what we were just talking about, what we didn't record because I didn't have one of my trusted teammates reminding me to record. But so Steve Vager is a client, and he asked me questions that all the time that make me think. Okay, it makes me, because nothing's written in stone when it comes to taxes. There's a couple of reasons. It's a moving target. Hi, Catherine. Thank you for attending. And
Hi,
I see
Joe.
a couple of other team members without their videos on, like Eileen. I thought I saw somebody else, but anyway, so Steve always asks me questions. Thank you, Eileen. And Rona's here, and Miss Liz. Wow. Now I'm nervous. I got all my team members watching. So taxes, there's a couple of issues here, moving targets. Hi, Marikar. The tax laws
Hey,
change
Joe.
all the time. Okay. That's number one. When they come up with new tax rules, okay, a lot of times they don't anticipate all the details that come out. And then it winds up going to court. I just read about a case this morning about how the IRS passed a law that if you, and this is what they said, if you are substantially past due on your taxes, that you have to surrender your passport. Okay. It was a pretty simple law. They said, listen, two steps. Number one, if you owe the IRS a substantial amount, we're going to take your passport. It sounds pretty simple. Well, here's where it gets complicated. The IRS has nothing to do with passports. The State Department, the US State Department, issues passports. So the IRS can't legally take a passport that they don't issue. Okay, so they have to go to the State Department. Now you got two government agencies fighting with each other. Okay. And the State Department says, okay, well, you say the IRS says that these people owe money. Number one. So that goes to court. Somebody fights it. That's how it works. They try to take somebody's passport and he says, oh no, you're not getting away with this. I'm going to take you to tax court. And then the judges decide what's the rule. So the judges come up with, so one argument that the taxpayer makes is, how does the IRS even know I owe this money? They're saying I owe the money, but I'm still fighting them. They're wrong. So they don't have a legal right to take my passport. That's the first question. So now the judges have to say, hey, does this guy have a case? Who's just because the IRS says you owe them money doesn't mean you owe them money. I've made a career out of proving the IRS wrong. Okay. Cases where the IRS said they owed money, blah, blah, and it's a dispute. So that's the first thing. The second thing was, and I forget what it was. I think it was the administration of actually taking the passport. Oh, and then the language. That was the other thing. So they said, what do they mean by substantially? You're substantially past due. What does that mean? If I owe $500, is that substantial? Or if I owe $1 million? How past due is past due? Okay. This stuff, so that law passed in 2015. Okay, it's all being hashed out in the courts still. That's how our system works. So sometimes somebody like Steven can ask me a question, and then you find out you go into a rabbit hole and you're like, oh my God, they don't even know. The people that made the rules up didn't anticipate this.
Like
Uh,
that law is not enforceable because the parameters are too vague.
Well, yeah. So you take some, and then in reality, the whole thing was, listen, people are leaving the country. They owe us a lot of money. We want to stop them. That makes sense. But then putting the logistics, the mechanisms in place is a whole nother story. Okay. And the truth, so they said, oh, we're going to get all these people that owe us money. And then the truth was that there's 29,000 cases that go to the tax court. There's only been a couple about the passport thing. They haven't been able to really take anybody's passports. Okay, so it's a whole big thing. If you want to travel, you owe the IRS money. You can go on there on the internet and say, oh, the IRS is going to take my passport, when in reality, it hardly ever happens. So that's why, and the whole reason why I'm bringing this up, it's just another example of how this system works. You can't take anything for granted. So Steve just asked me a very basic question: he got a grant? And congratulations, Steve. And that was another thing. The first time we met, you said, I'm an actor and I want to see if I can get a grant. And I said, they don't have grants for actors. You might not remember that, but I do. But you proved me wrong. So I didn't think they had them, but apparently they do. So now, is that money that Steve got from this? And that's another thing. Where did it come from? Did it come from a not-for-profit, Steve? Did it come from an individual?
The grant is privately funded. There's
Okay.
more. I mean, I can go and open up the website. It's privately funded, so there's no tax money involved.
Okay.
But it is a non-for-profit organization
Okay.
that together.
So when I do a search, and the way that I do a search, I do research on Google, like a lot of other people.
I think it's new though. It's called Guaranteed Income for Artists. And then the fund is called Creative Artists, Creatives Rebuild New York.
Yeah, okay.
And there are no
So
conditions attached to it. So it's
so what I need as an accountant, I need documentation. I don't need just, so on their website, it says that it's tax-free. Steve was in a video conference. It said they said it was tax-free. Okay, but I can't do my job based on what somebody saw on the internet, or I need a document that says this grant, it was deemed tax-free because this is what and that happened a lot with COVID, especially during COVID. There was a whole ton, and now there's a whole nother thing with the IRS this year, because a lot of states gave different grants. Okay, for they paid business owners rent. Okay, they gave payroll tax credits, the IRS. And now the IRS is getting inundated because the states didn't tell the recipients if they were going to have to pay tax on the money or not. It's like unemployment. Unemployment is taxable. And then 1 year the IRS said, oh, we're not going to tax 10,000 of it. So it's a moving target. It's a moving target, and it's not simple.
What about the student loans that are being forgiven? Has that been worked out?
That's another question that came up. Okay, and that's a moving target. So the student loan issue is the president decided, oh, we're going to give everybody a $10,000 credit, and they said, oh, that's great. And then the president got sued. a lot of people said, oh, you can't just give people a $10,000 credit like that. And then people started asking me, is it going to be taxable? Well, I don't know, because it's still not even a law where they're doing it. So it's a moving target. Okay. So for people on my team, this is important because clients ask us a lot of questions. Okay. And the wrong thing, unless you know it's absolutely true, is to give an answer. Okay. So, and I'm still guilty of that. I've had clients ask me questions and I give them an answer, and then I go back and I find out, oh, I was wrong. I was mistaken. It happens, the IRS is wrong all the time, all the time. That's why they have tax court. That's why they have appeals. Okay, just because the IRS sends out a notice does not mean it's correct. Okay, like I've said, I have disputed, actual income tax bills. That's the tax part. And a lot of times, even if I couldn't get the tax reduced, I was able to get penalties removed. Okay. So it's definitely a moving target. It's not getting simpler. It's getting more and more complicated. I think, Susan is a client, a friend, and I think the more she learns about this, the less she wants to know. But so here's the dilemma, folks. If you're in business, even if you work for somebody, you have a job, I believe that, the only way to get control of your finances, and your taxes have a lot to do with that, a major part of it, is to get at least a basic understanding of how the system works. Okay. And the only way that happens is if you look at the facts, how the system works, how we gather data, and ask some questions like Steve does, okay, like Susan does. There's no possible way you're going to have any kind of idea of what's going on with your taxes. And that's frustrating. That has to be frustrating for people, but it's a solvable issue. It's really solvable. And part of and I'm talking about people in the United States, okay, our attitude, the way that we're programmed to spend money. Okay, from day one, we are programmed to spend money. If you don't have enough money, you can borrow it. And I think that plays into the fear. People are afraid because most, to be a good American, you're supposed to be in debt. You're supposed to have a lot of credit cards. You're supposed to be drowning in debt. And that's what happens to most people. Most people, they wind up spending more than what they earn. They get into debt. And that's how the American economy works. And we happen to be the strongest economy in the world. Okay, so maybe it's
I thought China had the strongest economy.
I'm sorry, Steve.
I thought China had the strongest economy in the world.
I think they have the second largest, and they probably will overtake us, but it doesn't matter. Everybody wants the American dollar. Okay, that's what they want. Chinese people are trying to bring in American dollars because it's the strongest currency. Okay, and I'm just telling you what I believe, what I've seen over 40 years. People are afraid of taxes, and they're afraid of looking at themselves. When they look at their numbers, it tells a story. It's the result of all of their financial activities. And a lot of American people have overspent and they get into trouble. So that's why, and over the last couple of days, right before this, right before I got online, I was talking to my sister. She has a small business because my mom still makes crafts. She set up an Etsy store. And because of the IRS rules now, they actually made my mother become a business when she's got a hobby. Okay, that, that's another crazy result of how our government is working. They're taking people with hobbies and forcing them to prepare tax returns when they never had to before. Anyway, the call from my sister is because she looked at her financial report and she has no idea what it means, Maricar. And Maricar did, and she's like, oh, it's saying that I made $16,000. And I'm like, so I'm driving and I'm like, okay, here's another bad client complaining. And it's another family member. What a surprise. Don't do business with your family if you can avoid it. Anyway, so this morning I said, make a meeting with Maricar and we'll explain everything to you. So I go in there, I look at the wave account, and she didn't make 16,000, she lost 16,000. So, and the whole thing, I said, I looked at everything, looks perfect. We only have one question. And the whole conversation was because she has no idea what any of these terms mean. She says, what does it mean, shareholder loan? She actually Googled AAA. She's like, what is this triple? And the funny thing is she put it into that chat. Lay, hi, nice to see you. You'll get a kick out of this. She put it into that chat GPT. She said, explain to a 10-year-old what a accumulated adjustments account is. And it came back, it was all wrong. It was saying, okay, so for a 10-year-old, think of it like a piggy bank. It's like a special savings account. And every time you put a penny in there, if you put 10 pennies in there, after a while, there'll be 11 pennies. And it's like, that's not an accumulated adjustment account. So obviously these AIs aren't that intelligent. So that's good news for us accountants. Anyway, so the crux of the conversation was she's frustrated because now she has a business. Now she's trying to be responsible. And she did this before she had the business. She got all of her finances in order. She got her credit score up. She paid off all her credit cards. Okay, now she has this other part that's affecting her taxes, and she's frustrated because she doesn't understand it. Typical client, and I said, that's why we have the monthly client meetings. You're supposed to come on to the client meeting and learn this stuff. And we have a whole bunch of YouTube videos, how we do things, what the AAA account is, all of this stuff. Okay. So I had the same sort of conversation with my cousin. What a surprise. Another family member. She was all freaked out. She didn't understand about her payroll taxes. She's making twice as much money as she ever did in her life, and she feels like she has less money than ever because she doesn't know where all these taxes are going. She doesn't know what a W-2 is. And now this is a person with a master's degree. My sister has a master's, so they're not stupid. Okay, they're not ignorant. Brienne had a job her whole life. So whatever she took home from her salary, that was what she got paid. What she didn't understand was when you get paid $1,000 a week and they take the taxes out ahead of time, you're only getting 700. Well, now what's happening is she's getting paid 2,000 a week, and she's got to pay her own taxes. So if the taxes came out to 600 a week, she's got to pay the 600. She winds up with 1,400. Well, to her, she's paying way too much in taxes. But when I explained this to her, I said, if you look at your W-2 from before, and you look how much money you made compared to how much you took home, you were paying your taxes then, you just didn't realize it. It's a mindset. It's they, and when I showed her the W-2, there's only like 3 boxes you have to look at. There's only 3, and your pay stub. So if you want to do your taxes like a boss, okay, if you're working for somebody, get to understand what your pay stub is. Look at it, see what they're taking out, see why they're taking it out. A lot of people in the United States, especially people that have multiple sources of revenue, maybe they have a pension, okay, and they have Social Security, and maybe they have a business. The tax charts don't account for all that stuff. So whatever your income is from your job, okay, you're having taxes taken out. It won't always cover all your other income. And those people wind up having to pay at the end of the year, and they don't understand why. Okay. Other people, I see you smiling, Lay. Okay. So let me, I was one of my people coached me on how to do a video, and they said I should stop and ask questions every couple of minutes. And I'm way beyond my schedule here. So does anybody have any questions? Is anybody confused with our tax system? Be honest. Okay, I'm just saying, no
Well,
question.
you already know where my confusion lies, but I think that because of the fact that I fall under a certain bracket, it was figured out.
Yeah, well, hopefully you'll reach higher brackets, Dave.
Not
That's
that,
all.
I'm okay.
Yeah,
I'm
that's fine.
I'm in a
But
place where, I mean, I know I'm not gonna be here for the rest of my life. Yes, I do have ambitions, but for tax purposes, I'm good where I'm at with my reported income.
okay, but will you still have questions as to what's coming in, what's taxable, what you can write off?
I was just freaking out thinking I was gonna have to, and I was like, wait, what? But
Well, it's good. So it's good that I know about this now before I get your tax stuff.
Yeah.
Right?
yeah,
So
that's true.
a lot of you are from the Philippines, I believe, students, my teammates. We have somebody from California. Stephen, where are you? You in Florida? You look like you're in the
California,
Northern Lights. Oh,
Central
California.
California.
Oh, okay.
I'll be there May 2nd to the 7th. I haven't picked my lodgings yet, but I've got my plane ticket.
Nice. All right, so let me ask you all the questions. Does anybody here get a paycheck with a pay stub? Okay. How many of you are learning US taxes?
That's ongoing, isn't it?
I'm sorry, Lay?
I said, that's ongoing, isn't it? I mean, the taxes stuff changes so often. Isn't it something you kind of always have to be learning and keeping up on? I mean,
Yes,
yeah.
especially for people like me and my team.
This
It's
is why I
more,
was too. I was like, it's an ongoing process with all the new changes that pop up.
it's more complicated now than ever. Okay, more complicated, and I think the politicians like it that way. Even though they say, oh, we're gonna make this simple by making it more complicated. It's, put it this way, it's keeping me and my team in very busy.
Make it a little
But-
easier than just taking the standard deduction.
So here's the thing. Yeah, it's complicated, it's a moving target, but if you're a business owner, if you're a wage earner and you got to pay taxes, okay, there are fundamental things in place that can easily be learned. Okay, and I'm going to share a couple of those
Carrie
items.
just asked a question in the chat.
I'm sorry.
Carrie just asked a question in the chat. She said, should I file?
Oh,
my
hey, Carrie, how are you?
Hey, I'm doing well. How's everybody?
Hey, Carrie, nice to not really see you.
Oh gosh.
Yeah.
All right.
So Carrie, yeah, so, and this is what I just got done telling my sister. And a
Sorry.
few other people. The only way to write stuff off now is to have a business. Okay. And you don't want to have a Schedule C if all you have are expenses. That's why we set up S corps. Okay, but if you have a job, okay, or a pension, there's basically no more itemized deductions you can take. There are very little options. You might be able to do an IRA, but there's really nothing that you can write off anymore. But the way our economy is now, even people like my mom technically wind up having a business. So if you have a business, you get to write stuff off that you wouldn't normally get to write off. Okay, office in the home.
Okay.
I don't think anybody doesn't work from home, even if you have a job now. It's like in the United States, the whole thing is they're all trying to coax their employees to come back to work, and people don't even want to. So that means that they're working from home. If you work from home and you have a job, you still can't write that off. You can't write off your travel. But once you have a business, so like my mom, they have to go to the store and buy supplies. Well, now the car becomes partly deductible. Okay, a lot of things that they do, their internet connection. And that all goes on as business expenses. Now, a lot of times you wind up with losses, especially in the beginning.
Mhm.
The IRS doesn't like people taking losses on a Schedule C as a sole proprietor. So that's why we set up an S corp. Okay. Yeah, there's a cost to administering a business and keeping track of the expenses, but it's a lot less than if you calculate what you would pay in taxes. Even if you just made a $10,000 profit, that's below the poverty level here. You can't live on that much. You need extra money. So if you're below the poverty level, you make $10,000, you still have to pay $1,500 in Social Security taxes. Again, so my cousin Brienne, she's paying 15.3% she pays half as the employee and half as the business owner. So she's paying it twice. She's not used to that. Before, she only paid half of it. But also, because now she has a business, she gets to write off a lot of things that she couldn't when she only had a job. Okay.
Mhm.
Now, all of this
Makes
stuff,
sense.
all of this information is right in line with what I'm trying to teach about taxes, are fundamentals. It was the same way 40 years ago. It just wasn't that viable. There were less reasons to start your own business. People had itemized deductions. You know, you could write off charities, you could write off a lot more stuff. Okay, so that's, you know, if you want to, you know, do your taxes like a boss. I don't know who came up with that thing, but I like it, right, Carrie?
Yes, that's what got me here. I was like, oh, I'm like, Joe's doing taxes like a boss. I want to be a boss. Here I am.
Yeah, well, be careful what you ask for. Okay,
I know,
but if you
right?
want to do anything like a boss, like if I bought a drone, like
Mhm.
I bought a drone because I went on vacation to the Philippines and I was like, I don't know how to work this drone. I kept crashing it. So I know if I want to do my drone like a boss, I gotta overcome my fear. I gotta read the instructions. I gotta be willing to crash it. Otherwise, it's just gonna stay in the case.
Well, it's a
You
good
want
thing
to
you
do
put a
anything
drone
like
and not a plane.
if you want to do anything like a boss, I think you gotta understand the fundamentals. Okay, so like with the drone, there was this whole thing about the up thing and the down thing and sideways. I thought it just goes up. And now then I got to worry about the wind and stuff like that. But if I know the basics and I practice, I'm sure that I don't know if I can do it like a boss, but I'll be able to have fun with it at least. So,
You get 30 hours flight time with a drone and then you can be a boss. I have over 60 hours flying mine.
I'm more like 30 minutes. I
So-
gave up, but that's human nature. You know, it was tough and I was like, oh, this is harder than I thought. So I put it down. And it's the same thing with taxes. But
So
that
what-
first, go ahead, Steve.
I was gonna ask you, my trip to LA that's coming up on May 2nd, what do I need to do to turn that into a business trip so I can
You're
make
an
it?
actor.
Okay, that's it
Oh my
then.
God, you're an actor. Where else would you go to be an actor?
Atlanta,
Oh, now it's Atlanta?
yeah, there's a
Oh,
lot
I
going
thought
on.
it was Hollywood.
Well, because of, oh my goodness, what's his name?
So it's a good question. To write off anything, it has to be connected with your business.
Because of Tyler Perry, he built his studio in Atlanta. That's why Atlanta's got a lot of filming projects now.
Oh, yeah. But if you're going to California for business to, you know, advance your career, to, you know, maybe get some coaching clients, it's a business write-off.
So how
Now,
does the IRS ask for proof? Like, what kind of?
yeah,
proof
so
is-
the proof is you have the airline ticket, and you could actually keep a journal.
I'm even bringing Oliver with me.
Oh, yeah, so you could write off the plane fare for the bird.
Yeah.
Do you actually have to, you're not gonna bring him on a seat, are you?
Absolutely. He
Oh,
gets to
wow.
fly in the cabin.
Okay,
He's flying as
Uh,
a pet. They don't accept emotional service animals anymore as service animals. I mean, or emotional support animals as service animals.
okay. So the question is, you know, how do you write that off as an expense? If you, first of all, you decide if it's an expense. And then the way that you write it off is you pay it through your business account, which you don't have yet, Steve. Okay, but you wanna create the breadcrumbs, you wanna create the paper trail. Okay, and there's a lot of ways to do that. Number one, you have the airline ticket. And what the IRS will say, because this is what they always say, how do I know this is for business?
I just
And-
told you. I'll say I just
Right, and that's what I learned. I said, because my client said it was for business. And then if they say prove it, I would say, here's the receipt. You know, here's the proof that he paid for it. And then what I would add is you can add a calendar. You could say, these are the people I met. This is what I talked about. There's your proof. And if they don't like it, you can go to tax court with that, and they'll lose. They'll lose. Okay, because that's the only requirement. It's got to be for business and you have to justify it. Okay, there's a lot of ways to substantiate a business deduction, including you could get an affidavit from somebody that you did business with. Okay, anything that they would accept in a court of law.
So
Okay,
then
so-
if you have a meal with more than one person, as long as you're not by yourself, that can be considered a business expense.
And that's why they want to see the actual bill from the restaurant. So if you just have, they want to see the bill that says you bought two meals. So if I go.
Okay, so go ahead. So like
When I
all
go
the
in-
receipts I received from business lunches, I should be able to attach those receipts to my tax return, or do I upload them?
No, you don't attach your receipts. That's only if they want to audit you.
Okay,
Okay. But
Okay.
really, so technically, if you don't have the receipt, they can disallow it because you're not showing that you actually had a meal with somebody. You can't have a meal with yourself and write it off. Unless
There
you
used to
prove
be a
that you're.
rule that you had to make money from that, like lunch meeting or whatever. Has that been?
oh,
Yeah,
No, you
there
see,
used to be some type of clause that you had
I
to
feel
be
like
able
in
to prove
California?
that you were making money as a result
Oh,
of
that's
this.
it,
And in
it's,
California,
the question is, is it attached? Is there a business motive? Is there a profit motive? Okay, so if you're meeting your business partner and you're talking about your kids' school, that's technically not a business deduction. I don't go crazy with meals anymore. It's not worth it. You only get 50%. The last couple of years, you got 100% because of COVID. So it's not a great write-off. You can't deduct entertainment anymore. So you used to be able to buy somebody Broadway tickets and write it off. You can't do that anymore. But here's the fact, and that I want to play a short video that my team put together about doing taxes like a boss. If you have a W-2, okay, if you have a job and you just do a personal tax return, it's not that difficult to find the key numbers. Let me show you what they are. And if you're going to be doing people's taxes, this is important information. So every person that has a job that are getting paid weekly, monthly, whatever, they get a W-2. This is the form that goes to the employee and to the Social Security Administration. Okay. There's a lot of numbers all over the place, which gets people scared. The ones that matter most are 1, wages. That's what you're putting on your tax return. Box 2, federal income tax withholding. That's how much you've paid in already. Your state wages and your state income tax. So normally, depending on what state you live in, the state's going to follow the federal. So that's only three
Trying to
numbers.
turn this volume down. I'm sorry, I can't.
That's okay. But yeah, there's like hella.
don't you also need to know the fine?
The what?
The federal employee ID number of the company? It's
No,
on
I'm talking about if you want to understand your taxes.
I think you're talking
Okay.
about filing your own taxes.
Yeah, there's all the information on here is important, and if you're doing your own return, there might be stuff in these other boxes that you have to report, but that's why it's information overload. My objective is to just show people the basics so that you could look at your tax return and say, oh, this makes sense. Because at the end of the day, that's what I'm doing. I'm looking at the final product. I'm comparing it to last year. Okay, because most of the time, 95% of the time, your returns are going to mirror each other. If you had it last year, you probably have it again this year. Okay, so I try to eliminate all the distractions. So when you look at your tax return, let's say you made $100,000. And you look at your tax return, it says 10,000 on that line 1. And now I'm going to match this up with the actual form. So that box 1, this box 1 here is what gets reported on line 1A. Okay. Now, why do I say? Because people make mistakes. If you made 100,000 and the return says 10,000, well, all your accountant did was leave off a 0. That's simple. That's simple to look at. You look at your address. See, when we send our clients their tax returns, we are encouraging them, don't just sign the return, look at it. It's a last check to make sure that we're getting the return in correctly. If something is off, you're going to get a letter, or you're going to lose your refund. It's going to go to a wrong address. Okay, you should check your ID numbers, make sure they're all correct. Okay, whether you're a client of Bedrock's or you're doing it yourself. Okay, yeah, Carrie, Steve, if you want to do your own returns, do them, put them on the side, and then take them and look at it later and make sure everything adds up and makes sense.
Well, I mean, I need to look at the stuff that Catherine sent me. I was like, oops.
Yeah, so what we're doing now is we're sending our clients quarterly P&Ls. And it's the same thing. We want, it's a collaboration. That's the way it always was when I first started. It was never the client just gave the accountant the information and we just entered it. It was always face-to-face meetings, back and forth questions. And when something goes out incorrectly, then we have to correct it. The less corrections that we have to do, the better for everyone. So that's the first check. Okay. On page 2, okay, it's going to show you, okay, how much was withheld. You should at least look at that, your name, address, social security number. If you have dependents, make sure that they're correct. The name is correct. Okay. That's the very minimum. Okay. Now, if you have a business, that's going to be, if you have a Schedule C, I mean, yeah, whether if it's a sole proprietorship or an S Corp, it's going to wind up on this schedule. And your K1, which shows your profit or loss, is going to wind up here. Now, if you want to know where you stand at any time during the year, it's pretty simple. If you could just take how much is my income so far, how much have I paid in, and let's say it's the first quarter. Multiply it by 4. say, where am I gonna be if this happens every quarter for the whole year? And that's how we do tax projections. And the tools are simple. It's called Google. And this is how I do it, folks, and I'm not embarrassed. I mean, I used to do this all with a instruction booklet, a pencil, literally a pencil and a piece of paper. But now I could just go, and don't go to the chat GPT thing. They've already proven that they're wrong. How much would I owe in taxes if I make 100,000? Okay, it'll bring, and this is just, so you want to avoid the ads, to be honest with you. So here, I like this. If you make 100,000 a year and living in New York, you're gonna pay about $28,000 in taxes. Divide that by 12. That's how much you have to have paid in every month.
Mm,
So, yeah, the taxes are complicated, but if you just apply those
pretty
simple
good.
basics, okay, if you just have a job, a pension, your taxes are easy. It's simple. It's simple math. If you have a business, or if you want to get tax write-offs, you need to have a business. Because there's no other way to write stuff off. Okay. And if you have a business, especially if you're doing, a good amount of transactions, you want to keep on top of that on a regular basis. That's why we're doing the, what are we doing again, Susan? I forgot. Oh, that's why we do the quarterly financials. We want people to look at them, ask questions about them. It only helps the entire process. All right, so I'm gonna stop for a second before I'm gonna show this video. Does anybody?
Can I ask a
Yeah.
question?
Go ahead, Karen.
So, when you go and you look and you realize that, okay, I've made, 100K, I'm supposed to roughly have 28K in, and I have not. Is there a way that as you're getting your pay stubs, throughout the weeks or months or however you get paid, where you can say, oh, I'm not putting enough in, and you go in and change the amount you want to put into your taxes, like change your what is it, 4? Is it your W-4? Is that a smart move to do so then you won't end up owing?
Yeah, absolutely.
Okay.
You don't want to get, first of all, what I'm trying to do for people is eliminate any anxiety, the surprises. What do you mean I owe $20,000?
Right.
I get this all the time. They want, oh, how come this year's refund is less? And I'm like, well, if you just look at your return from last year, compare those three numbers, see if they withheld enough money. Did they withhold? And they don't, those charts aren't always right. That's the problem. When you have a job, I've never, if those charts were right, the taxes at the end of the year would come out to 0. You wouldn't owe, and you wouldn't get any money back. They should be perfect, but they're not. So that's why, in October, we're starting to look at all our business clients. How much money did you make? Now, some clients, like I tell them, I don't want you to overpay during the year, so we're going to keep track of it. You might have to pay, but it's better. We know you're going to have to pay. Okay, but if you just have a job, Carrie, And I don't mean just a job. I mean, it's simple. Because you could just have it withheld right at the source. You could do it with the federal and the state. The other alternative is you pay quarterlies. You pay in your own estimates. And you could do that directly with the government. I think it's gov.pay. I'm not even sure, but you can just look it up. The states, you should always have an account. You should have your own IRS account, and you should have an account with your state tax department. This way you can go direct to them.
Okay.
Okay, you could pay them directly. You don't want to pay anything by check anymore. They get lost. It's just, the government doesn't want checks. They want electronic, they want fake money. It's all in the computer. It's just a, there's no actual money. It's just like an electronic, whatever.
Well, when you did mine last year, I wrote a check and it was fine. I didn't have any issues.
Yeah, well, sometimes, yeah. I mean, I'm saying if you can avoid writing a check. So
Okay.
let me, I hope this is it. I'm going to share this video that my team made for me. Share screen. And then I think, can you hear that, Carrie?
Yep. Wait a minute, it's running up. I can see it.
Hello everyone, I'm Luz Ventura. I work in Bedrock as the Director of Accounting. Hello, good afternoon. I'm Catherine Dickman. I work for Bedrock as one of the accounting team leader, and I work closely with Joe and Luz in preparing the CFO packages and tax returns.
Hi everyone, good afternoon. I am Jasmine Arrega. I'm working in Bedrock as accounting team leader and working closely with Joe and Luz.
For me, ideal tax preparation is having all the tax documents and correct data that I needed, having effective client acceptance policies and procedures, and having a compliant client. Complete tax documents and data. One of the challenges in tax preparation is obtaining correct data and tax documents from clients on a timely basis. It's not the same when you're answering break practices wherein all data are given. Effective client acceptance policies and procedures, it includes screening a client by reviewing their previous tax returns. So you'll have an idea how they record their taxes and asking them questions so you'll know more about their tax conditions. If any potentially criminal matters come to light, you should request that the prospective client engage the services of appropriate legal counsel before beginning an engagement. Having a compliant client, the faster they provide my needed data or documents, the faster I can finish their tax return, allowing us more time to review their tax returns before filing them. You need to plan ahead and set a deadline to your clients in providing their tax documents. Explain to them it's important not to rush things, so there's still enough time to review their tax return before filing them, and they can take advantage of every tax deduction and credit at their disposal. Starting early means more time to gather information for potential tax breaks and getting their refunds soon. Actually, if the client already provided their previous tax returns, most of the basic information are already there. You just need to confirm to the client if there's changes in their address, filing status, or dependents. The dependent's birthday is not shown in the tax return, but you need to input it to the tax software, so don't forget to ask for it. Same with the driver's license. You have to ask for a copy. And if the client resides in New York, you need to ask for the back portion where document number is shown. You need to input the document number also. If the client has a business, they usually provide both their personal and business tax returns. You can use them as your reference. When I review the previous personal tax returns of a client, I look what are the tax documents they reported. If there's W-2, 1099s, or any tax documents, or if they have K1 scheduled for their export or K1 scheduled for their partnership, that will be my starting reference. What are the documents or additional documents or additional information that I need to add from the client?
So some general tips for your tax situation includes number one, you keep your record accurate and organized. These records include your income and expenses. And then let's take advantage of tax deductions and credits that you are qualified for. Third, consider contributing to tax advantage retirement accounts. And then fourth, you can consult with a qualified tax professional for personalized advice. Practices that can help you cope with a stressful tax season includes start early. Don't wait until the last minute to start working on your taxes. Starting early can give you more time to prepare and reduce the stress associated with rushing to meet the deadline. And then second, get organized. Collect all the necessary documents and paperwork in one place, such as your W-2s, your 1099s, and other receipts. This can help you avoid any last minute crumbling and reduce your stress level. Third, seek for help. If you're struggling with your taxes, consider reaching out to a qualified tax professional for assistance. They can help you navigate the tax code and answer any questions you may have. And then four, focus on the positive. While taxes can be stressful, try to focus on the positive. Remember that filing your taxes is a way to comply with the law and can result in a refund or tax credit that can help improve your financial situation. Normally, this includes first and foremost filing late. So failing to file your tax return on time can result in penalties and interest charges. So to avoid this, make sure you file your return prior or on or before the deadline, or request for an extension if you need more time. And then next would be making mistakes. Filing an inaccurate tax return can result in penalties as well, or even an audit. You can avoid this by carefully reviewing your return for errors, double checking your math, the computation, and making sure you've entered all the information correctly. Next would be not taking advantage of tax deductions and credits. Many taxpayers miss out on tax deductions and credits that they are eligible for, which can result in a higher tax bill. In order to avoid this, make sure you research and take advantage of all the tax breaks you qualify for. Next is failing to report all income. Not reporting all your income, such as your freelance work or tips, can result also in penalties and interest charges. To avoid this, make sure you report all your income on your tax return. So check out your W-2s, your 1099s, and all other tax documents that you have. Next would be falling for tax scams. During tax season, scammers often try to trick taxpayers into giving them money or personal information. So to avoid this, be cautious of unsolicited emails, phone calls, or text messages asking for personal or financial information, and only use trusted sources to file your taxes.
When you are running a business, it is important to keep your receipts for your income, bill receipts for your expenses, bank statement records, and tax documents. Tax documents include but not limited to your previous tax returns, W-2 if you are employed. At the same time, those are the primary documents that are needed in starting the tax preparation. As per IRS, estimated taxes should be paid quarterly with a specific payment due date. And there are things that we should take note. One, underpayment or not filing account subject penalty charges. Number two, even your due is a refund when you file the income tax, still subject for penalty charges. And who are subject for estimated taxes? They are individuals, including sole proprietors, and corporation shareholders. Better record keeping is the best way to manage your cash flow. It is difficult to figure out your liquidity when you are not able to track your income and expenses because you fail to keep your record. In result, you don't know how much you will spend and how much you will invest for your business expansion. you will end up getting on it, and that could be the worst practice in managing the cash flow. If bookkeeping is not your jam, you can ask assistance with the internal and external bookkeeper and tax professional. For your time, thank you for joining us in our next workshop.
Wow. So I think that was pretty powerful because that comes right from the people that are actually preparing the returns on a regular basis.
They did a great job.
They did, right? I'm
Yes,
so
I agree.
proud of all of you. To think that, you know, if any of you are looking to get into the tax business, what was it, Luz, March 7th? No, 2 years. Luz is going to be with us for 2 years, I think, on March 7th, right?
8.
Yeah, that's what I said, March 8th. It's her 2-year anniversary. And I don't think she even knew what a W-2 was.
Don't know anything.
Yeah, and now she's running the whole show here. Thank you, Liz. And Catherine and Jasmine it wasn't too long ago, they were students. They were students, and now to see them you know, put that together without any assistance from me. I didn't even know that they did it until this morning. Okay. So if you're looking to get into the tax business, you could just follow what these women have done. And if you're looking to pay less in taxes, then follow, or at least be the boss of your taxes, follow all the stuff that we went through today. It's really, I think we've simplified it. We made it so it could be more understandable for people. And that's my story. I'm sticking with it. Normally we have a whole set of slides to promote our business, but I'm not even going to do that anymore. I think what we do here speaks for itself. Are there any questions, comments? Harry, you always have a
The
question.
ladies, I'm sorry, but congratulations to the ladies for putting that together. To see like the growth, having been a client is absolutely amazing. Luz, like you're on it.
Thank you, Carrie.
You're welcome. I still remember some of your emails. Carrie, I need this. Where is your stuff? And I'm like, Luz is gonna be on me. Listen, my stuff. So this is great.
We keep. Yeah, and what's heartwarming for me is because, you know, I get calls now. Like I said, I got a call from my sister, my new worst client. They jump over it. 2 years ago, it was my daughter, and then Luz took over. And I don't even talk to my daughter about her taxes anymore. So she was my worst client. Now it's my sister. And I go in and I look at her, what Maricar did, and I said, there's nothing wrong with this. It's perfect. The only thing that's wrong is that you don't understand what a AAA account is. And you can't go to Chat GPT. You gotta come to us. So yeah, does anybody else have any questions? I want to thank everybody for attending. I want to thank Team Bedrock for showing up. I know that you're all in the middle of tax season.
I have
So
a
you
question.
have to start working overtime. Go
When
ahead,
you-
Steve.
I guess it's a fairly simple, it's considered loss, but like when your expenses way more outweigh your income. That's just, I guess it's listed as a loss then, right? Regardless of the.
Well, unfortunately, this is the reality. Most people that go into business, and Susan could back me up on this, most people that go into business never even send out the first invoice, Dave. They never even make a penny because all they really had was an idea. They didn't have a viable product or service. But now they have a bunch of business deductions, right? And then you got people that actually start making money, and that's even worse because if they're just spending, and I see this all the time, they just spend a lot more money than they ever bring in, and they just lose money. Now, as a sole proprietor, that's a problem because the IRS has what they call the hobby loss rule. They say you're not really in this for business. You're not in this for profit because you just keep losing money. Well, what if they are in it for profit? They're just terrible business people. They're just terrible.
Is there a limit to how long you can claim the land? It used to be 7 years, right? That you, a business. could
No,
claim
no.
it.
So it's a great question because this is what I try to teach a lot of people that want to start a business. Those deductions you could capture and carry them forward. Because if you are in it for business, for profit, hopefully somewhere down the road, you're gonna make a profit. And now you've carried those expenses forward so that you get a tax benefit from it. I see way too many people that they just spend the money, they never get any kind of tax benefit. And usually it's because they're not structured properly. You got to have a corporation to do
So
that.
how, can you explain, can you talk about that a little bit more? Like my expenses for this year can be carried over for a tax benefit for next year or last year's tax expenses. How is that used to generate a tax benefit? I mean, how does that, like you just said, I'm messing up.
I'll give you an example. So when you sell stocks, you have capital and you lose money, you have capital losses. You can only deduct up to $3,000 a year in capital losses. Okay, well, what if you lost 100,000? Well, you deduct 3,000 and next year you got 97,000 to carry forward. It's literally done just through a form. It's an attachment to your return. You say, listen, I lost $20,000 this year. None of it is deductible. I'm carrying it forward to next year.
Do you have to itemize in order to do that?
Well, you do itemize when you file your tax rate, when you file your business return. That's where everything is itemized.
Is there a standard deduction for businesses like there are for people?
No,
Mhm.
no standard deduction. Not on the federal level. On the state level, yeah, a lot of times the states will tax you based on level. So like if you're in New York State S Corp and you gross more than 500,000, your minimum tax will go up from like 25 to 175.
Mhm.
But that's just, your annual franchise fee.
I look forward to that.
Look forward to make Steve, you were on a roll a little while ago.
Yeah.
It's like, oh my God, you really had a good, I liked what you were doing.
Yeah, that was had my video clients coming in, but
Yeah,
so it can be done.
it
So-
can be done. Any other questions?
Yes,
Yeah.
is there really a time limit on how long they will see you as, because of non-profitability? And I had a particularly bad year last year, hit really hard. And obviously I have my already set expenses, which are pretty high just to be in business. And then I did a lot of spending, some of which I know I shouldn't have done. And I did it anyhow, beside the point.
Typical entrepreneur.
Well, there are certain things that I've been trying to operate without, which have kept me at a level less than professional. So I'm not getting hired. So the truth is I made those I took on those expenses personally because obviously I'm a proprietor, not a sole proprietor, not an actual business as in corporation, because
Wait, you are a
costs here to
corporation.
do that are so much to even just get started.
Wait, you are a corporation. Lee Scheidel Inc. I think we just did your tax return.
Okay, I'll look. I don't think so because I can't even afford to pay the fees up front that you gotta have to be a corporation in California.
That's another, yeah, it's $800 to be.
$800 a year.
Just to get
Mhm.
started. That's before you even make a dollar. And I've had, like I said, I had a really bad year, but that's beside the point. If you don't have it, I mean, you're talking blood from a turnip.
Yeah. That's, yeah, I hear you. California's not a good state. New Jersey's not a good state.
New York doesn't have that, right? I don't remember New York having that.
Not that much. It's, you know, the minimum is $25. But yeah, that's the way California is. Everything's expensive.
So I'm just wondering though, is there a point where like after 3 years, will they say, no more, you can't even claim yourself a business because you aren't?
Not if you're a corporation.
Yeah, give me about 5 minutes.
Not if you're a corporation. That's why corporations get special treatment when it comes to being in business.
What if Lee was able to use a New York address for her business?
She can't.
You said she can't?
No.
Her business can't.
I mean,
move.
she can have a New York address, but she's still got to be registered in California.
I see, because it's
Because
with a
that's where
business.
she's physically located. And they know where your IP address is. You can't lie. I mean, you could try to lie about that. People have been doing it for forever, but they're gonna get caught now. Because especially states like California, they know that, you know, what people try to do is they register in a state like Delaware, Nevada. Nevada's easy because they're close to California. But California will see where you're actually working and they will bag you. It hasn't started yet, but believe me, they know where you're working from. And that's what they call nexus. It's state law. It's whose laws are you under the jurisdiction of? Okay. It's like driving in California. You know, I used to have Tennessee license plates. It's a long story, but I actually couldn't get my car registered in New York. And it was easier because I had family in Tennessee. I registered it in my mother's name. And I'm driving around New York with Tennessee license plates. For some reason, I kept getting pulled over. And then yeah, right, Carrie? And then I realized, I said, oh my God, it's because of these stupid license plates. I'm not supposed to be driving with Tennessee plates. It's this, you know, now that's, you know, they see the license plate. I mean, they physically see it. They also have pictures of it. I was probably on some kind of list, like pull this guy over when you see him. That's the way it's going to be with all the states, because all the states want their share of their taxes. So there's a lot of people doing exactly what you said, Steve, and that a lot of them are going to be getting caught. Just like a lot of people have been doing stuff, you know, with the IRS getting away with it, and they're just not getting away with it anymore, including these 1099s. The 1099s that they're going to be making PayPal and Venmo and Zelle issue. Okay. So one of our social media person, Honeybell, again, these chat GPT things, I don't know. She asked the chat GPT what would happen if two 1099s get issued for the same income. And that's what's going to happen. Okay, because it's going to come from, so like if I'm paying a vendor, okay, and I just give them a 1099, meanwhile, I was paying them through PayPal or Venmo, well, they're going to get a 1099 from them too. So this time the answer actually came out correct. It said, yes, getting duplicate 1099s on 1099 on that kind of income is confusing, and this is what, this is the ramifications. You could get audited, the other company, only bad things will happen. Okay. But I forget how I got on that subject. Any other questions? Everybody good? I know my team's on overtime. I'm glad you think that's funny, Karen. All right. I think
You know, I'm
that's
all
it.
about the employees.
What?
I said, you know, I'm all about the employees.
Yes, yes. Taking care of it. Yeah. All right, ladies and gentlemen, thank you so much. I appreciate you attending. And if you could do one thing for me, it's subscribe to our YouTube channel. I don't have a link for it. Thank you, Sydney. Yeah, we're trying to get to over 1,000 subscribers. So if you're not subscribed, then please subscribe. Just, I guess, Google Bedrock on YouTube or something like that. All right. Thank you, everyone.
Thanks,
Thank you,
everybody.
Joe.
Have a good day.
All right,
Nice to see
take care.
you, Karen,
Bye.
everybody.
Good. Yes, it's so good to see you guys.
Thank you, Joel.
Bye.
And bye, Susan. I heard you. I think you're still here. Bye, everybody.